All right, Jared, stay with us. We got more earnings coming in. We may have to break in at any moment, so we warn our market panel in advance. We have Eugene Profit. He is the founder of Profit Investments. And Mark Martiak is the senior wealth strategist with Premier Wealth First Allied Securities. Gentlemen, thank you very much for coming. Eugene, first to you. There's an old adage, you don't fight the tape, and the tape has been bad for the past 2 days. Over 400-point drop over the past 2 days, almost 450. But you say the market is overreacting to the election. How so?
Well, David, I think I don't like the way this market closed today, but I think fundamentals, if you go back into the end of October, you saw 6% of companies beating earnings expectations. And essentially, the uncertainty around the elections, the uncertainty around fiscal cliff, has forced the market into looking at macro headlines again. You had some weak data coming in from Greece right after the election. So I think investors have basically decided to sell the news, if you will. And I think long term, this will be proven to be a mistake. This will end up being a great opportunity to buy some high quality names in the market. But I would stay away from names like Groupon. Instead, I would look at more infrastructure technology plays like Microsoft or EMC.
So going with some quality names that you know very well. Mark, do you agree that this will end up being more of a 2009 opportunity? Because if you look at any stock chart from 2009, it usually looks like a pretty decent moonshot because it was the low of the past several years. Or do you see this as a little bit more serious?
No, this is serious, but it's temporarily serious until the end of the year. We need a fiscal cliff compromise so that U.S. households can avoid paying an additional $221 billion in taxes. That works out to about $1,700 annually. I'm telling my clients, stay calm and stay poised. They're extremely worried. And I'm talking about very affluent individuals and families. They're worrying since since our existing president was reelected. For some reason, many of my clients felt Romney should be the new president. And now I think that that reality is just sinking in. So I think this will present a buying opportunity. We just have to get through this uncertain period. And I can't tell you when that, until Congress comes together with the president and we fix this. But that's probably
okay. You're looking at Nordstrom right now, by the way, and it is trading down after hours as well. Robert Gray is going to be going through the numbers. Is Robert available? No. Let me ask you specifically, Mark, about one tax that is of concern to a lot of investors, particularly retirees. The dividend tax is set to not only double but almost triple as a result of the expiring tax cuts from the the Bush era. If that happens, isn't there going to be a big move out of a lot of these high-paying dividend stocks?
I agree. As long as tax treatment remains favorable right now, there's no reason to move. But if we see 15% up to 43%, we got a major problem.
So it's a problem for stocks like Johnson & Johnson and other stocks that had been the refuge of a lot of people over the past year.
I agree. Dividend-paying stocks were your best friend, and very defensive at that as well. And I always like the paid-to-wait theme. But right now, I'm advising my clients, keep their money on the sideline. Don't go in and buy any new dividend stocks to add to your portfolio.
We got the Nordstrom numbers cleaned up here. Let's get to Robert Gray.
Hey guys, coming in a little better than expected on revenue, slight beat, $2.81 billion, but earnings missing by a penny, 71 cents to 72. You're seeing a little weakness there in after-hours trading as well. Back to you.
Okay, let me just get a quick reaction from Eugene Profit, because you're not afraid of stocks right now, but two names here are moving down.
Yeah, and I think it is a stock picker's market. I mean, when you talk about dividends as you just were, I ask, where does the money go? Interest rates are still very low, and even if you have a higher tax rate on dividends, that percentage here is still going to be higher on an equivalency basis than anywhere else. And we don't own Nordstrom's, as one of your guests a little bit earlier said. Some of your higher-end retailers have done very well, like Tiffany's, and your lower-ends, like Costco, has done well as well. I think Nordstrom's has executed very well over a lot of the last few years. I'd like to dig down to numbers and see why they're a penny light, but I was glad to see that the revenue was okay there.
Hey, Eugene, we were just talking to Mark about how the new tax structure might affect stocks. You picked Medtronic, which, of course, makes the pacemakers and some other medical devices. They're going to be hit by a new tax as part of Obamacare. Does that concern you when recommending Medtronic?
Well, we have it built into our evaluation model, and it's our belief that essentially as the economy begins to level off, a lot of procedures that haven't happened, that's going to have been delayed. You're going to have a whole lot more insured coming into the market. So near term, yes, the uncertainty is a little bit of a concern, but longer term with demographics, we think Medtronic is an excellent play. And we invest for a little bit longer than the end of the year. I mean, we invest over the market cycle, which is a 3 to 5 year time period. And when you have a situation where stocks fundamentally are sound, but macro headlines make investors run for the exits for a temporary period of time, we find that to be a great buying opportunity.
All right. Good to see you both, Eugene Profit, Jared Levy, and Mark Martiak. Thank you.
Thanks, guys.